Good Thursday morning, Market Chameleons, and everyone joining us for the first time. Thanks for coming by and checking out the Market Chameleon pre-market show with this man, Mitri Pargamonic. How you doing, D?
Good morning, Will. How are you?
Great. You want to start with the disclaimer?
Yep. Good morning, everyone. Before we get started, keep in mind Will and I and Market Chameleon, we're not a registered investment advisor. We're not a broker dealer. We're not telling you what to do. We're just sharing ideas. If you need advice, call your registered investment advisor, call your broker. That's what they're there for. With that, I'm going to share my screen. And as I'm doing that, as a quick note, Will and I, we do this show in the morning to help answer questions you may have about the Market Chameleon tools, the data, the analytics. If you have a question, you could type it into the live chat on YouTube. Will's watching it. He'll read them back to me. If you want to come on a show and ask your question live, we do provide a link to Zoom. Once you get into Zoom, there's a button there, raise your hand. Click on that. Once we let you in, you could ask your question live and direct. I think yesterday, Will, you said somebody at the end of the show tried to come in. We didn't have enough time. So if you want to come today, ask the question, just click on that link on Zoom. And again, just click that, raise your hand. Then we'll let you in. You could ask your question direct. To give a couple more minutes for more people to join us, and give a couple minutes for you guys to put in questions on the chat box. We'll start out taking a look at the pre-market report, see if we could get some insights on what's trading in pre-market hours, and then we'll move on to the questions. Okay, so pre-market report. These are stocks trading in a pre-market hours. I'm going to scroll down here. We have a list of our most active stocks, biggest percentage gainers, biggest percentage decliners. Coming down here, I see 49 stocks made our percentage gainers list, 213 made our percentage decliners list. So from this perspective, right now, it seems like the trading in pre-market hours is pretty bearish, right? A lot more selling pressure than buying pressure from this view. Let's come up here, look at it from another angle, and we have this calendar view. Today's September 21st. You could go back days, but this is what's going on so far today. We have 237 stocks that are up in the pre-market hours, 649 stocks that are down. As far as volume goes, there are 128 million shares trading on up volume versus 79 million on down volume. But if we convert that volume to dollar value, not every stock is the same price. If we convert it to dollar value, we see $786 million worth of stock trading higher versus $4.6 billion worth of stock trading lower. So that also confirms that the trading in pre-market hours is, with some bearish sentiment. Okay. One more check, and then we'll go to the questions. I'm going to come down here, and when we look at this list, we see that there are stocks in there, low cap stocks, ETFs, leverage products, any security listed on a major U.S. exchange. If it's trading in pre-market hours and it meets our thresholds, it could make this list. And to narrow down, we could use the filters here. We want to narrow it down to a small group of stocks. You can use in my watch list to see what's going on. Put stocks in your watch list in a pre-market hours. We're going to use this filter here in ETF. I'm going to drop it down, and when you click on it, you get a drop-down menu. You got different ETFs to select from. SPY, that's the S&P 500 ETF. It's the first one. We're going to click on that. And when you do that, the list below gets filtered by stocks that are holdings in the SPY ETF. So we could see what's going on in the S&P 500 constituents. And here we see 4 stocks made our percentage gainers list, 44 on our decliners. Again, these are certain thresholds they have to meet based on liquidity, price change, volumes, and so forth. But here, right now, pretty much, any perspective we look at it, the trading in a pre-market hours is trading with some bearish sentiment. So I give you a couple minutes, Will, if the person.
Yeah, we actually, the individual from yesterday hasn't come on, so we don't have that live question there for us, but we did have quite a few questions, actually.
Okay.
Two different ones coming from other chameleons on the chat. The first one I think was Jackie, and I have 4 questions on unusual option volume search.
Okay.
One, what does number of days in last 12 mean? More occurrence? That's his question.
Okay.
Do you want to go through each one, or should I read them all first?
Well, let me go to the unusual option volume report first, so people have a view of what's going on.
Yeah, just let everyone know how you're clicking over to it. That's
huge. So up top under options menu, we get this unusual option volume, and when you click on it, you kind of you get to this unusual option volume report. And when you're on here, right, I think the question had to do with this row. So that's
the first question. Yes.
Right. So these are stocks that are showing large option volume relative to, its historical daily average, right? So we compare the volume on a day versus the daily average using like last 90 days. And if it's above there by a certain threshold, this one's 4.2 times its usual, it will make this list. So the initial, the initial requirement to make this list is just that the volume itself has to be above where its average daily volume is. Okay. And then you could start filtering it down further, but that's the initial list. So yesterday, 118. Then the question was, well, what are these number of days? And this is showing, it's going back the last 12 days. I don't remember why we picked 12 days, but it's going back 12 days and saying the following. Out of the last 12 days, how many of those days did this stock make it on this list? Okay, so instead of going back, I think it's because we have like 12 here. But instead of going back and searching each day like this, right, you could go here like Pinterest, right? 6 days. So if you click on that, it highlights the 6 days that the option volume exceeded its average daily. Okay. Oh, sorry, that's the stock volume. Option volume is over here. So with that, let's see. So with that, you could kind of go back and look maybe what happened those days, right? Because you could come back over here, click on these. This goes back further. All right, I gotta remember why we did the 12 days. But the idea there is, what's going on, what's going on in those days that it made the unusual volumes. Right, so here's the average volume over here. Okay, so that's what it is. If you wanted to look at trends or how often, is it just one time, or is it trending, or does it make that list a lot in the last couple of weeks? What was the other question?
Yeah, it's 4 other questions, or 3 other now. How you define market sentiment, bullish or bearish? Then the question is bullish buy call, bearish or buy at ask. I guess market sentiment he's asking. How's that created, right, and what's it mean?
Right. So to answer it quickly, we did these like for longer explanations, I have videos like for a half hour or 45 minutes, but the quick answer is, when we look at the option trades, right? We isolate the trades where we say, okay, is this trade from a single leg trade? Is it a multi-leg trade? So forth. We put them in buckets, right? Then we analyze the trade itself and say, can we now each trade, right? Each trade, when we look at the option, it has a delta, right? So the delta of the option is your hedge ratio. It's what each side would have to either buy or sell the stock to get delta neutral, right? So a buyer of a call with a 50 delta, is long 50 deltas, so he would have to short it. The seller of the call is short 50 deltas, he would have to buy, right? So first we look at the delta of the trade, and then algorithmically we try to see if we could determine if this trade incoming was more likely like a buy or sell of a call, or sell or purchase of a put. Okay, so we use surrounding data to say with certain degree of confidence we believe that this was an incoming order, or this was an order perhaps that was sitting on a book that got swept on the way down or on the way up. So we use, it's an algorithm and looks at a bunch of different things. And if it can make that determination, then it says, okay, then the incoming order, right? That's the end user, right? Trying to trade against the market maker or somebody else. The end user they're more likely buying or selling, right? And we accumulate those deltas throughout the day, right? Like here, let's go in SQ. If you click on it, and what we do is run a cumulative over here, a cumulative on balance delta volume, right? So this is just from the start of day and keeps adding to the balance, negative and positive, to get the cumulative net effect if it's more bearish or bullish on the day. And using that, we try to determine, is the order flow more bullish or bearish, right? So it could be, the order flow could be trying to buy volatility or sell volatility, but the initial impact is it more bullish or bearish, because each of them has a delta, right? So they still have a delta at that moment. So that's what this is trying to do, just like we did with the pre-market report, right? What do we do with the pre-market report? Well, we're trying to figure out, right, in the pre-market report, okay, we got all these trades happening, right? We got all these trades happening here, but what do we think is happening? All right, well, what do we think is happening? And we could see here, the spread between the number of stocks that are up versus down, the dollar value of the stocks up versus down, and so forth, to try to figure out, how the markets are behaving, what type of sentiment is there based on, in the morning, what's going on in pre-market. Well, they're reacting to all the news, the Fed, the Fed projections, what the statements are afterwards. Everybody's reconfiguring their models, and this is the general sentiment, general consensus afterwards. So that's what the option order flow is trying to do here. It's trying to figure out, in general, how is this flow looking like today? And this net delta gives you, the imbalance which way. Again, there's no, when we look at trades, when we look at specific trades, the tape doesn't tell us here's this person bought, this person sold. That's not how it works. So when you look at the data and use surrounding data, sometimes you can make a very good inference based on what you're seeing. And that's the attempt, like, to make it inference or guess of this is what's most likely we believe is happening.
That was number 3 in the questions. What does the net delta mean?
Right. So the net delta is on balance, right? So if we had, if we saw trades with positive 10,000 deltas, then new trades come in with negative 3,000 deltas. Well, then on balance, it's positive 7,000, right? So it's a cumulative delta throughout the day.
Perfect. The next question was from, he had a final piece to it, was, does the unusual option volume mean the total option volume, not the volume for a specific option contract?
Yeah, this is looking at the total option volume in the stock. So it's not looking at a specific trade or specific option contract. It's looking at the total volume for the stock. And of course, if you go to the options chain, let me see, we'll go to GDX. Once you're on the options chain, you kind of get a breakdown of the option volume over here by expiration. But to help you along the way, you do have these, graphs here that we talk about the distribution of the volume throughout the day by strike. You could go by individual expiration and see which contracts or which strikes, calls, puts. I think you could, if you do the most active options over here, this lists by the most active options. So if you click on it, it brings up the options chain here. So once you get into the options chain, you got a lot more tools to narrow things down.
Perfect. We then had another question from Corey, and that was, Corey said, yesterday an IV search was discussed. Can you do a follow-up today? And you don't have to do it today necessarily, because we have like 10 minutes before the open if you wanted to do it. But he says, can you follow up today discussing how to use the data in selecting? He basically wants to walk through an options trade. How would you do a data? How would you use the data to, look at a trade? That was his question.
So the screen that we did, right? The actual screen. Let me see, it was options by expiration. We were not looking at a specific trade or strategy. The purpose of this screen that we were talking about yesterday was trying to find an option expiration, that the implied volatility was below the historical realized volatility. That was the question, to the screen. Didn't have to do with any particular trade, particular option. The assumption is if you're trying to look for expirations that are trading below, right? If you're looking at expirations, let's just do that again. I'll set it up. So over here, we could see all the different symbols. These are the option expirations. This is the implied volatility. Let me go to over here, historical vol. This is the implied volatility. These are the historical realized vol. So what we were looking for is, let me see, I think we did 60 days or more out. So we're looking for longer term options. What I did was I'm going to reset it to yesterday. I think I did $20 billion in market cap to narrow it down. I did option volume, has to be above 1,000. So we're looking for expirations that are trading, right? That there's some trading going on, in that this is anchored by expiration. All right. So each symbol, it could have multiple expirations that meet these conditions. And I think I did that at the money spread under 25 cents. So we're looking for the bid ask spreads to be narrower. So then what we did was we said, okay, now the conditions we're looking for is where the implied volatility is below the 20-day historical vol, the realized volatility in the stock, and below the 1-year historical. So to do that, first we compared IV to 20-day, and we said that that has to be, I think, let's do below 10%, meaning that the implied volatility currently is at least 10% or more below where the last 20 days of volatility realized vol. And then we said that at the money IV for the 1 year, I think also 10% below. So we narrowed it down to 11, right? So Apple showed up, ARM today, test again. This could be changing, right? This could change intraday. It probably changed yesterday because implied volatilities were moving. And why would we be looking for such a screen? Well, if we're looking for low implied vol, right, where implied volatility is trading below the realized historical vol, then the assumption is we're looking to buy Vega, we're looking to buy options with the underlying assumption that we think implied volatility, maybe in general or maybe in the stock, is low, and that there's good reason to believe that it might start reverting back to its norm. So the idea there is, why are we looking at it? Perhaps to buy vol, right? Or why is it low? If it's low, how many stocks are meeting this condition across the board? So here we only see 11, right? So we have Tesla, Apple. If we go there, wait, I don't have a link to the expiration, but if we go to the Apple options chain, and which one was it? I think down here.
It was in October, right?
Or December, somewhere out here. It was further out. If we go here, we could see, where the implied vol is. Wait, where was it? Of December 23. So over here. So 61 days out, right? More than 60 days. We see the implied volatility is 23. But in the last 20 days, right? Last 20 days, the volatility in the stock moved at 26, right? More than what the market is projecting next 61 days. In the last 252 days, it moved at 27. So if you trade volatility, right, not direction, but if you're actually a volatility trader where you're buying vol, staying delta neutral, trading your gamma, and you're trying to scalp realized volatility versus implied volatility, then this could be a starting point for analyzing potential candidates. And if there's a follow-up, let me know.
No, that was super helpful. It's interesting. Well, it's way to look at the market. There was a lot of commentary early on, I guess, about the market, and some negative insight today given on CNBC. So, I mean, it's why you look at things and maybe look for opportunities. Any follow-up questions, Corey? I know there's a little bit of a delay, but hopefully that was helpful. Yeah, got it. Thank you. Awesome. Great job, Dima. It's now 5 minutes before the opening. Any last questions? We don't have any.
I think someone brought up, I'm going to go to SPY real quick, just show you guys one more thing. I think the question was, I'm on SPY, and the question was, how does SPY or the market, what does the market usually do after Fed meeting, so we could kind of see the magnitude of the moves and the if there was any kind of like skew. So I'm going to go here under events, FOMC meeting. When you click on that, so FOMC meeting, that's the interest rate decisions, right? So this is the one day after. This was yesterday. So usually the one day after, this is what would happen since May. We keep a rolling 12 period. So the average move the day after, plus or minus, was 1.5. We could see that so far, more often the stock moved down on the day than up. 64% of the time it moved down, 36% up. The average of all the moves was down 0.8%. Sorry, an eighth of a percent, 0.8%. The spread, max up move up 1.5, max down move down 3.6. See over here, and the median move was down 0.7%. So, you could see it started to recover maybe 2 weeks out, but the initial day after looks like, it tended to be more negative. On average, the move was about 1.5%, which, if we look going out, right, that first day's move, the first day's volatility tended to be pretty big relative to, you could see like a two-day vol 1.8%, 1 day 1.5, 3 day 2.1. So the next day tended to be a pretty volatile day after the Fed meeting. So I think that was question from the one of my emails. All right, I think we're right next to. Tomorrow, I'm out. Got a doctor's appointment to go to. So we're not going to be able to do the show in the morning, and we're back. Wait, are we off Monday?
I know the
Tuesday?
schools are off. I think it may be an exchange holiday.
Okay, so maybe.
Do we have a spot on the site we can check exchange holidays? I forget. Let me check. See. Just checking NYC website. Yeah, look, looks like we're open. So
Okay.
So we'll be open on Monday, it looks like, which is awesome.
Right.
So we'll have a show. We'll have a show Monday morning. Are you able to do a show Monday? We'll do the show on Monday.
Yeah, I think Monday I can. The tomorrow, no.
All right, perfect. Everyone have a great trading day today, a great weekend. We will not see you tomorrow. Awesome job, Dina.
All right. Thanks everyone for joining. Stay safe out there. Have a great trading day. Safe weekend. Hope to see you guys next week.
Thanks again, buddy.